Hello, thanks for the presentation. My name is Mohamed Sukona from Mali Folk Center. And I had a question about the microfinance, or finance in general for like the women and finances. We talked about the fact that a lot of women had or some ways of pooling some funds, together, and that are, loan-free, interest-free. But then by putting commercial banks and IMFs to try to get into that forms of finance, then it's going to bring, isn't it going to bring just more like an interest system into a system that was interest-free to begin with? And I was wondering, why not use other, there's other financial systems that are coming up, like Islamic finance and things like that, that could be incorporated, especially in the context of certain African countries who are already using it. And I had another question about, we're talking a lot about women and energy, but also I know, like coming from a Muslim country, there is a lot of women who are in a polygamy, who are in a polygamous relationship, and I haven't seen or heard about any data yet to see if that make a difference of those two women who are the women who are in a polygamous relationship and who are in a monogamous relationship, and what is being done into that respect, because I'm sure they don't have the same access to finance and to other things like that. So that was just something. If you guys can talk more about.
That's an interesting question. Mohammed, I don't know about the last question is certainly interesting. We have done a report. I used to run the program in the Middle East and North Africa for women in business out of Cairo, so we covered 19 countries. And one of the studies that we supported was a study on women's entrepreneurship in 5 countries, and the Saudis recently adapted the research methodology, and so there's a report on women's entrepreneurship in Saudi Arabia, and I know that they looked into some of the questions on polygamy and access to finance and entrepreneurship in general. So unfortunately I don't remember exactly what the differences were. I don't think that they looked into issues of energy, but definitely in terms of access to finance there's information there that you can look up. And then on the interest-free bit, I don't think that I argued at all that that lending should be interest-free necessarily. What I was saying is that for some of the women, it's difficult to actually be a customer for a commercial institution given the financing requirements. And so in some instances it's actually easier if group lending then just at the microfinance level can actually limit the risk for the bank. And then this way it actually works. Like I remember, for example, we were talking about Muslim countries. We worked for First Bank in Pakistan. And one of the very unique ways that a Women's Entrepreneurship Association wanted to help their membership in terms of getting access to finance in Lahore is that they actually, as an association, decided that they're going to take the risk for any of their members if they were not paying back. And this was, again, very, very sophisticated women. And so the bank gave them a special, gave them special consideration for financing.
Okay, let's have behind. You have a
Yes, I have a question for the CELCO representative. I'm wondering, when you're saying we consider them as partners instead of beneficiaries, what does it actually mean in terms of the work that you do?
Yeah. Partners instead of beneficiaries, again, it was an idea when we came into the business, into the partnership with Sewa. We sort of had this idea that we need to sell cook stoves to women, they need to purchase the cook stoves, we need to sell lights to women, they need to purchase the lights. But Sewa sort of instilled in us this idea that it's not just about selling systems to women. The idea is of integrating women at every level of your supply chain. So whether it's in your installation, whether it is in your maintenance, whether it is in understanding the needs of the customer. They sort of recommended to us that don't just have Selco staff in there. Let's train women to be part of that process as well. And so I would say partners more than beneficiaries. It's not more as passive recipients of solutions, but more, taking part in the different levels of the solution. So that's what we mean by partners more than beneficiaries.
Okay, we'll allow 2 more questions. Godfrey? Yes.
Thank you very much. I will also take the second name of Godfrey. Otherwise, my name is Medat Mugazi. Yes, yeah. Good things keep happening. First of all, I'm from Tanzania, but also I'm Godfrey. Okay, thank you. My question is going to Sarah from Selco, and I just got interested in the issue of working with, piggybacking on the financial institution. I also understand that Selco is social. It is a social
enterprise.
It's a company.
Yes.
For profit or something.
For profit.
For profit. Now, this is something we are trying to do in Uganda, especially in promotion of solar uptake. But we've been having challenges, especially on the side of the companies like Selco. I'm happy that you are making a breakthrough in terms of probably the promotion, the market linkages, and you have established branches and so on. Now, my first question is, you do installations. What is your source of capital to be able to really finance this? And in terms of the systems that we install, what is the functionality rate? Because you have branches that provide after-sales services and maintenance,
Okay, I'm not sure I got the second question, but the first one is, we basically sell, our systems are anywhere from about $100, $150 to about $500. That's mostly the cost of our systems. So when we work with banks or when we disperse our systems to people, we usually get paid upfront from the bank first, and then it's between the agreement is between the bank and the customer to then pay back that loan. So it's anywhere from like $100, $150 to about $500, the cost of the solar system. And the second question, I didn't understand the second question. I didn't hear it. The functionality of our systems, what they're used for.
No, in terms of
lifetime
durability.
Oh, the durability. So we provide, so for our panels, it's about a 10-year warranty. And panels that were still working, honestly, in '95 are still working even now. We have batteries which have about a 5-year warranty. Our fixtures, that is the electronics, are about a year. And that includes our charge controllers as well. So we have warranties, at least a minimum of 1 year for all our components, yeah.
Okay. One last question. Yes?
It's more of a comment than a question. While interacting with the MFIs and linking them up with the users, the major problem with the energy sector is that we have always been promoting this as a consumptive good. So we need to take into fact that it needs to be promoted as a productive commodity rather than a consumptive commodity, where I think is the main linkage that we are missing out on. Concerning this, when we are also trying to promote this towards the user, the client who is going to take the loan, we often talk in terms of money, whereas these rural people, they are not much aware of the value of money or how it works. They are very much closer to the things that they are using. Like for example, in the biogas, we do not talk to them in terms of money. You save 20 rupees a day and pay. We don't say that way. What we say is, you sell the milk. You sell the milk, and this amount of milk, the saving from selling this amount of money, you use it to pay. So they make more sense of these things. So I think these are small issues which we need to bring into while linking up the microfinancing with the clients. And I just wanted to ask Selco whether they are using these things also to just create an awareness and to sensitize these users in terms of microfinancing, how they work here. And the second one is, we are often around this table, we often say that the microfinancing interest is high. But how high is high? People have been depending upon neighbors and relatives from, taking loan from them. And we have accounts, we have cases where people are paying as high as 32%. You go to the commercial bank and you pay 18 to 19%. MFIs are charging 15%. So what is the highness of that? Where is it high? And another thing we need to say, we need to also bring clearly to the clients is that why they are charging this money. Why? These people form groups. It's a social input. And whatever goes into the paying the MFI, this money goes back to the clients, because the MFIs that we work in, they only give loans to the members. They are the depositors, plus they are also creditors in the bank, within the MFIs. So what money comes back is another source of income for these people. They pay the MFIs, the benefit the MFI makes goes back to the members. So it's an income, it's a round circle. That is how our MFIs work in the country. So if anybody is working in this line, I think this thing also needs to be made clear, so that the members of the MFIs, they realize that they are making a double income. One, through making productive use of the system, and second is through the interest rate that is being paid back into the organization. So there are these little things which we need to take into account just to make people, sensitize the people how the MFIs work. Because I wouldn't like to talk about the commercial banks in my country, because the network is very bad where the commercial banks are concerned. But where the MFIs are concerned, you have more than 200,000 systems spread all over the country, working very close to the rural people in the remotest area. So I think it's a fantastic idea to promote the self-help groups as a way of doing the microfinancing.
Okay, thank you so much for that comment. It has been very helpful. Though I think I would want to demystify some of the things in microfinance. I've been in the microfinance industry for 15 years. And you'll find that in the case of East Africa, we have microfinance institutions that are charging up to 36% in terms of interest rates. And if you look at the entrepreneurs that we're working with, and especially our GVAP experience, is that we're working with entrepreneurs that are in the micro category, and their profitability is about 30%. So if you're paying a loan at 36% and your profitability is 30%, then it makes it doesn't make so much sense in terms of you're making a profit of 30%, and the loan is up to 36%, and they're doing it on a monthly and on a straight line. So some of them, we're not saying all the microfinance institutions, but our experience in Kenya and in East Africa generally is that MFIs have proven to be more expensive than commercial banks, and basically entrepreneurs just fear the formal-looking financial institutions and always tend to go to banks. But the study we did in 2009 that pointed out that MFIs are the most expensive, and followed by SACCOs were much better, because in terms of SACCOs, they would give a dividend. You'd be a member of a SACCO, and whatever they make, you share it out at the end of the year. Unlike microfinance institutions that will make 30%, of course they have their costs, and only give you 2% or 1%. What is SACCO?
A SACCO is a savings and credit organization that is member-owned and member-run. And you find that in East Africa, SACCOs are even out giving a bank a run for their money. So they're capitalized, they're more capitalized than some of the banks. So basically, it's a very intricate balance that we need to look at, and also look at the country context that
that we are operating in. And then I'll also ask Selko to...
No, and I just want to quickly add, I think this ties into your point and Mohammed, who asked that question before. So we, actually, I think we only work with 1 or 2 MFIs. We have actually really tapped into local financing entities. Which something like the SACCOs, in India you have cooperative banks, and I think the important thing is to look at existing financing entities. They are there because people have been using them, and you just have to find a way to work with them and understand what their barrier is, and figure out a way in how you can overcome that by some sort of subsidy, whether it's a transaction cost or whether it's the down payment that the customer makes. But I definitely say that those 2 points are interconnected, and I wouldn't say that MFIs are one of the organizations. I mean, it's not, we definitely look at what is the local context, local financing entity first, and then work our way from there. So I definitely agree with both the points.
Okay, we are closing the discussion and we're having the next presentation.